What's going on, everybody? Welcome to Risky Ryan Trades. Obviously, a lot of selling pressure going on over the weekend. We're going to be discussing where the bottom is, what's going on, how to navigate what is happening, how I'll be navigating what is happening. I did not have time this weekend to put out a video, and I'm not going to have time today to go through all the charts, but there is only really one chart in particular that I want to look at and I want to share with you and give you my thoughts on. Before we dive into it, here is my disclaimer. Trading is risky, and so is investing. Content in this video is not financial advice. It's my opinion only. And if you lose money, you can't sue me. And be assured, I'm losing money too. I think everybody in the markets is losing money right now. But with that being said, let's get into it. So this is a monthly chart of the S&P 500. We broke these, so I'm gonna delete these and this. So right now it's pre-market. Market hasn't opened yet. However, right now the S&P 500 in pre-market is sitting right here at $512. And what that means, these are Heikin-Ashi candles. They indicate if there is an overall uptrend forming or an overall downtrend forming. And I want to show you what happens when uptrends slow down. You can see strong uptrends. There's no wicks on the bottom of these candles. And as you get higher or closer to a potential sell-off, the candles start getting smaller and wicks start to form. And here you have a red candle, and the wick breaks the bottom of the previous candle. Now, sometimes it can happen like this right here, where it breaks it, and then it keeps moving forward, or here, where it breaks it and keeps moving forward. However, as a general indicator, it's pretty useful. And what we have now, once market opens, we're going to have a wick all the way down here, knocking out this candle and putting us right at this Gann level of 505. I would be shocked. I would be shocked. Right now it's 512. I'd be shocked if we don't at least touch that. I would be shocked. And what this tells me is I'm not going to be rushing in to buy this. Like I'm not calling bottom right here. And I think that there is actually a really good chance that at the very least, we're gonna see opportunities in the market to buy later on in the week, next week, potentially next month. So I'm not rushing in to buy. I did start reducing some of my positions a few weeks ago. Actually, let's go to a weekly chart. I had switched over into the equal weighted S&P, which has been a little bit safer of a situation for me. Yeah, we're down to here, you guys. So we're right in this section right here. If this breaks, we're coming down to the Gann angle to 450 on the SPY, or potentially anyways. So I don't really see like a swift recovery anytime soon. However, like the current nature of the fall is very swift. And like the COVID crash, sometimes those snap back. However, I'll be watching the VIX to see if that rolls over before really initiating more buys. So I'm going to be exercising some patience right now. Never forget, this is a long-term game. Yes, if you have a trading account, you shouldn't be in any positions, but if you have some long-term investments, now I would not be selling right now necessarily. If you haven't reduced any of your portfolio so far, in the last month or two, I hesitate to say it's too late, but now we're so close to this Gann level of support. I'd hate to see you sell here, us tap this, and then run up. Which it could happen. So I would, I'll be reducing positions further if I see, the S&P close a candle under these lows, because I think at that point we're coming back to probably 547, 457, 450, it would put us, touching this Gann level again. So now's a great time to exercise patience. Like I said on my last video, it's a great time to reconsider your portfolio balance. I've been considering that all weekend, and I did a study, which I will be sharing this video with you probably on Wednesday, hopefully earlier. Stocks in the last 10 years that outperformed the S&P 500, that had lighter drawdowns, meaning they didn't drop as much as the S&P 500, or at least comparable over the last 10 years. And those are the names I'm looking at right now to add to my portfolio balance. Past performance is not an indicator or a guarantee of future performance, but at least it gives you, in my opinion, it gives you something to work from. It makes you a little bit more comfortable with those names. It's easier to see a drawdown on a certain stock if historically, that's, there's a certain amount that it only draws down, and like once it bounces back, it'll outperform, all that good stuff. So that'll be a very interesting video. I'll give you one sneak preview to it. One of the strongest names that I discovered is Costco, which has been my largest position for the last 10 years. So that has paid off very handsomely. And that's why even in this market, like, I have not even thought about selling a single share. So yeah, keep an eye out for that video. If you want to see it, hit that subscribe button. Hit me with the likes. Hit me with the comments. What names are you looking at right now? I know TLT was, one of the names people are telling me they're thinking about holding. Obviously, if I go to the regular candles, you can see we've had a big, jump up. Pre-market, we're all the way at 99. So that'll be something to watch for sure. But with that being said, I wanted to keep this short and simple. So I'll see you on the next video. Thank you very much for all of your likes, subscribes, and comments. And Risky Ryan out.